Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the Q3 and 9 months post-earnings conference call of Royal Orchid Hotels Limited. Today on the call from the management team we have with us Mr. Chandra Balji, Chairman and Managing Director, Mr. Arjun Balji, President, Mr. Keshav Balji, and Mr. Amit Jaiswal, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the period ended December 2025, the growth perspective and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Good evening. A very warm welcome to all our investors, partners, and stakeholders. Thank you for joining us today as we present our Q3 and 9 months for year ended 26 performance highlights. This quarter marks another important milestone in our journey of disciplined growth, operational excellence, and strategic transformation. In Q3 FY2026, we have delivered a strong consolidated performance with income from operations growing 26.6% year-on-year and room revenue surging 45% year-on-year. EBITDA grew by 13.8%, reflecting our continued focus on cost efficiency and premium positioning. Our operational metrics remain robust overall. A special highlight this quarter has been exceptional performance of Iconica Mumbai, which generated 17.4 crores in income within its initial months of operation and achieved the distinction of being ranked number 1 hotel on TripAdvisor in Mumbai within just 4 months. This is a testament of our execution capability and brand strength. We have now crossed a significant milestone, 10,700 keys across 168 plus hotels, including upcoming properties with 47 plus hotels in the pipeline. Our expansion remains focused, scalable, and aligned with our asset-light philosophy, driving higher returns while maintaining capital discipline. Over the past 2 decades, starting from a single property in Bangalore, Royal Orchid Hotel Limited has evolved into a diversified hospitality group with strong presence across business, leisure, wedding, and wildlife destinations. As we transition into the next phase of growth, we are building a technology-driven, asset-light hospitality powerhouse aimed at maximizing reach, enhancing operational efficiency, delivering superior shareholder value. We have clearly defined brand architecture: Z, Place, Regenta, Crestoria, and Iconica, combined with smart execution and relentless focus on returns on invested capital. We are confident in shaping the future of Indian hospitality. The company is on a growth path and we continue to follow asset-light strategy for future growth. As we talk to you through the detailed performance, growth strategy and future, we remain guided by one core principle: delivering exceptional guest experience while creating sustainable long-term value for all the stakeholders. The performance presentation have been uploaded in the stock exchanges. We have given a detailed presentation covering most aspects of our business. I hope you have gone through the same. Thank you once again for your continued support and trust.
Thank you, sir. Arjun and Keshav, would you like to add something?
You got a question being asked, but thank you, investors. You all have been patient. You all have shown your confidence in the company over the last year since we've listed, and we are eternally grateful. As you can see, over the last 1 year, so we've pivoted and we now have clarity in the brands. Each one of them is on a growth path. We've demonstrated that with Iconica, and the best is still ahead.
Thank you, Arjun. Keshav, would you like to say something?
No, I think we have a good pipeline of hotels coming up. I think we're quite proud of that, and we look forward to executing well on our Vision 2030. Happy to take questions going forward.
Sure. Thank you.
Thank
All
you.
those who wish to ask a question may use the option of raise hand. We'll take the first question from Yash Dantewadia. Yash, you can go ahead, please.
Hello, am I audible?
Yes.
Yes, hi. So I saw your list of upcoming hotels. You have four under revenue sharing, two in Goa, one in Lucknow, and one in Gurgaon. So by when can we see all of these four getting executed? What are the timelines for the revenue share hotels to get executed, all four of them? And what kind of top line can we expect from top line and EBITDA can we expect from these four in particular? Because obviously revenue sharing should be more profitable than management, than just hotel management, right?
Yeah.
Can I just take that one,
Yeah, please.
Mr. Yash, thanks so much for your question.
Yeah.
The notion that revenue sharing is more profitable than management actually needs just a little introspection on, because there is an inherent risk to revenue sharing, but when it comes to management, right, it is pure cash flow. So while the numbers may not be as large as a revenue share hotel, right, it you get into an asset light model predominantly to to speed up the J curve, right? So now we'll get to your second bit of the question, which was when the four hotels are coming up and what they'll add. So Mr. Jaiswal, would you like to?
Just a small,
Sorry, I
just a small question in between. Sorry to interrupt you, but revenue sharing and profit sharing is risky inherently. But revenue sharing is basically you get a percentage of sales. I'm assuming.
No, we don't
No, it's the other
get.
way
We
around. So on
pay.
revenue sharing, we give the hotel owner a share of the top line revenue, right?
Okay.
And so in a management contract, so think about it in two ways, right? One is you own the P&L and one you don't own the P&L. In a revenue share situation, you own the P&L and you pay the owner out. And in a management contract, the owner owns the P&L and you are paid a management fee. That's the distinction between the two.
Understood. Okay.
So the four hotels which you said, out of which two hotels is bound to come very shortly. The South Goa one and one in North Goa. These two will come very shortly, maybe in 4 to 5 months from now. Then the Gurgaon one will come by maybe end of September or October. And the Lucknow one will take at least a year because the work is going on interior. So it will take at least 1 year from now.
Right. Could you share some numbers?
See
What are you
numbers.
expecting?
See numbers. If you see from Lucknow one, the top line I can give some guidance. Like the top line from Lucknow will be somewhere around 40 crores, and the Gurgaon one will be around 25 crores, and both the North Goa one, Dodamarg one will come roughly around 20. First year it will be around 12 to 15 crores. Second year it should reach 18 crores, and the South Goa one that one will be around 6 crores, roughly
So
6 to 7.
from both the Goa properties, I can expect a ballpark figure of 25 crores in the
20,
first year, right?
20, yeah, 22 crores from both the Goa property and the Gurgaon one 25 and Lucknow 40 crores around.
Right. And just a question on Iconica.
Yeah.
Iconica, I think, has been sold out for most of January because I keep checking the kind of bookings that you're getting.
Yeah,
And I think Feb also, I think you're sold out tomorrow, today and tomorrow, from what I can see.
yeah,
And I think Feb and March also seems quite busy, right?
yeah.
So because the prices are on the higher end, that might be a seasonal impact. But I think the traffic in the hotel also is picking up at a much sooner than anticipated pace, right? Because you did 17 quarters in this particular 17 crores in this particular quarter. So in the upcoming quarter, which is the current quarter, I think you're sort of um, uh, under guiding. I think you should easily be able to do 20 25. Sorry, not 20 25. Sorry, 25 to 30 crores from Iconica in this particular quarter. Am I getting anything wrong, or are we on track to do
No,
that?
roughly 24 crores, 23, 24 crores in this quarter we should get from Iconica.
Yeah. So are we expecting the hotel to be profitable?
Yeah.
Because I think this quarter it wasn't profitable, right?
No, I tell you, this quarter, why it was not profitable, there were a lot of pre-operating expenses. See, the hotel started operation sometime end of September. Okay, but the bar license had not come, which came end of October. So hotel full-fledged it started from November. Okay, so there were certain pre-operating expenses which, as per the accounting standard, cannot be capitalized. Okay, so those pre-operating expenses had to be written off in this quarter because of all those issues of accounting. So that is why you are seeing that there is a little minus, but going forward it will become profitable.
Right. And why did I mean, obviously, you're the CFO, and I am not as smart in the whole accounting understanding as such. But why did the profit, like the EPS, drop by so much? I think it dropped by 40% year on year, even though your
Yes.
cash profits were on. Can you just explain the
Yeah,
Indies
see,
impact? How
it's
much it was?
primarily because of Iconica, which is on a fixed lease for 25 years. So Indian accounting standard Ind AS 116 has created this. So notional, Ind AS effect which has come almost 13 crores we have taken, 12 crores we have taken the hit in this quarter. That is why I have always published Ind AS and without Ind AS result. And if you look at the without Ind AS result, it's pretty good.
Right. So that subsidiary sale. So I'll just come back in the queue post this.
Okay.
But I'm pretty sure a lot of people will have this question. Could you just throw some light on the subsidiary sale? When is the cash going to reflect in our P&L or balance sheet?
See, the subsidiary sale we have initiated, we have signed the MOU and the money has started coming in into our account. Two tranches of money has already come, almost 40-45% money has already come into our account. Balance will come in March and April. So by April end, the entire transaction will get closed.
So I think post this we are debt free, right?
It is debt free in the sense that we need to now decide how do we use these funds, whatever funds is there. How do we should we clear the debt or should we use it for the growth of the company? Now that since the debts have come down drastically, the cost of the debt is now almost around 7.75%. So we have to take a business decision on that. That how do we use this money to clear the debt, or should we use it for further growth of the company?
I have a lot more questions regarding this, but I'll just come back in queue
Yeah,
out of
sure,
respect. Yeah.
sure.
Thank, thank you. We'll take the next question from Rahul Bangadian. Rahul, you can go ahead.
Good afternoon, sirs. Thank you for taking my question. First one is if you could just help us with the occupancy numbers of Iconica and if it is possible for the quarter, but also probably how it has progressed month-wise.
See, Rahul, I'll tell you one thing. See, the hotel has started doing well. It has done very well in November. It dipped little bit in December because post 15 December, Indigo issue also had come up in December. January it has done good. February, March also looks good. But sharing the occupancy of right, it will be not right on my part because competition also looks at the data and all. So, but however, let me tell you, it's doing a good occupancy. Above 70, around 70 plus percentage, and it will grow in time to come.
Okay, I can understand the hesitation of not sharing the number, sir, but competition does share it. In fact, they're doing on a property basis, but I take your hesitation right now in that sense. The other question I had, sir, is on the now because you have disclosed the Iconica, non-Iconica, the impact of Iconica on the numbers, we are also able to see what is happening on the non-Iconica side. So
Yes.
essentially, there the top line growth has kind of been in single digits. We have moved from about last year there was
Yes.
no Iconica, so from 90 crores roughly we have gone to probably about a 98 or some number like that. So
Yes.
just help us understand how. So the way I am looking at it, please correct me if I'm wrong. Unless you grow that number at a healthy pace, the operating leverage is not going to come through because the management contracts are of that nature. So, and that the growth at let's say a 25% or a 30% kind of number will need you to add rooms also at that pace. How are you looking at this pace? Because otherwise the absolute profit numbers are not changing only there.
You are right, Rahul. You are absolutely right. Without Iconica, the numbers growth is in single digit. Okay, now let me tell you, organic growth will be that much only. Okay, the organic growth can see we are already at around 70% occupancy. Now it can go up by 2% or 3%. It can't go beyond that. And ADR
No,
growth
sir. I
also.
was specifically on the managed hotel side, not the other.
The managed hotel side, see, we have signed a lot of hotels in the pipeline. 47 hotels are in pipeline. The only thing is that all those hotels, when it starts operation, we start getting our fees. So there will be a robust growth in the coming financial year once all these hotels opens up and we start getting our fees.
Okay. Because otherwise, sir, the math as you also admitted, the maths isn't adding up because otherwise, how do we reach, Arjun has talked about an aspirational 150 crore kind of PAT number. How do we reach that? Math is what I'm trying to
See,
understand without
yes,
growth being fast enough.
you are right, Rahul. See, once this 4750 hotel opens up, so our management fees will grow in a big way. Second, all these four revenue share hotel when it comes up, so that will give me an additional around 100 crores of top line and around that kind of EBITDA. And that is how we have projected. And plus, we are on the verge of signing almost every week hotels.
Fair enough, sir. Just one final question before I go back in the queue. It's actually the way you give the guest numbers in the presentation. Are those only for the owned properties, or are those only for the lease? How is what is the guest number there? Where are we calculating that?
We are calculating all the portfolio.
But then that sir looks a very. I'm assuming it doesn't include the managed portfolios.
No, no.
Okay, so the owned, leased, and the JV ones. Those are
Yes,
three are included there.
yes, yes.
Sure. Okay. Thank you.
Thank you. We'll take the next question from Chirag. Chirag, you can go ahead.
Yeah, thanks for the opportunity. First question on the depreciation and finance cost. So you have mentioned in the PPT that for the quarter, depreciation and finance cost has increased notionally by 19 crores. This is
Yes.
for the single quarter. Now, when
Yes.
I take a 10% odd discount rate, just to get an idea that what will be the incremental interest and depreciation on account of Ind AS from Iconica with your 36 crore lease rental, I think the difference comes to 17-18 crores per year, which means
Yes.
if my actual outflow is 36 odd crores,
Yes.
my reported interest and depreciation in P&L will be 53-54 odd crores.
Yes. You are right. You are right, Chirag.
Right. So that is on an annual basis.
Yes.
The notional increase is 19 crores in a single quarter. So
No. See, what happens is if you really look at it, pro rata we have to calculate. What we do, 25 years rent divided it by this thing, and the actual rent also will come, no? See, if you really look at it, so not only the India's factor will come, the actual rent also will come every
so
quarter.
19 crore is not notional.
No, it is not. No. Out of the 12 is notional. 12 crore is
Okay.
notional, and actual rent also we are paying, 3 crores a month.
Right. So 19.5 crore is the total increase because
Yes.
the words that are used is increased notionally by 19.48 crores, and hence I was a bit confused. So 19.48 out of that, 12 is notional,
Is the
which is
notional.
the Ind AS effect, and
Yes.
7 is the actual
Actual. Yes.
actual for the 2 months
Yes.
or
Yes.
whatever that time period is.
Yes. 3 months.
Okay. So going forward, what will be the So if you take Q3 as the base, how much interest and depreciation will increase from Q4 onwards, since this is going to be fully operational now?
So as you rightly said, 36 plus, we have to add in that around 18. So around 53, 54, that one quarter divided by 4, So around around that much will come.
Okay. And so you mentioned that in Q4, for Iconica, we can expect 23, 24 odd crores of revenues
Yes,
in Q4.
yes,
So since all the pre-opening costs and all those things are captured in Q3,
yes,
is it fair to assume 2 to 3 crores bottom line in
yes,
the...
yes. We are also, yes, you are right, sir.
So we have done 1.6 crore loss in
Yes,
Q3,
it will
but
turn,
2
it
to
will
3
turn
crores
into
profit
a
is
profit. Yeah,
doable in Q4.
yes, yes.
Okay, and just to so you mentioned the breakup for those four revenue sharing hotels. So cumulatively, that adds roughly 100 odd crores to the
Roughly
revenue.
100 odd crores, yes.
100 odd crores. Okay, and this should we expect this to come in by FY28, like fully
Yes.
operational? And
Next year, April onwards, I feel the entire thing will come.
so all the four hotels should be up and running in the coming year. Uh,
Lucknow, we are expecting by, February, March, 1 month here and there, it should open. Yeah, it should
February,
open.
March. And what
But
about the...
you know our country, how it is. Iconica was ready to open in the month of June, July, but we got delayed by almost 3 months due to license issues and all the stuff.
Got it. Arjun, my next question is for you.
Sure.
Given that, the kind of success we had with Iconica, in the upcoming hotels, I can see that we are coming up with a new Iconica under a managed contract model. So since, we don't have, if we manage contract, right? In the upcoming hotels, there is one Iconica which is coming under managed contract model in Jodhpur. So my
Yeah.
question is that since we don't have a lot of long-term debt, I mean, if you exclude lease liability, I don't believe that we have a lot of net debt on the books, and we are having healthy cash flows coming in every year. How many, like, what do you think in 27 and 28 more Iconicas you are expecting under the revenue sharing or lease model?
So, that's really tough to say, but our target for 2030 was to do 8, and we announced that in June. Now, after that, we opened, the Iconica number 1. Now, post this, there are a number of discussions on, but at the end of the day, these hotels have to be to a certain standard, to a certain size, to a certain, we're setting brand standard with Iconica. So, we've said we do 8 by 2030, and I think that's the target. So, if we can do it quicker, great. But that's kind of the guidance that I want to stick with for right now. We don't really want to be, over promising today.
So out of it, how many will be under managed? Because managed does
I,
not add
I,
any
I
significant
don't.
chunk to your top line.
No, so that's again, it's a discussion point that we're having with a number of hotel owners and partners, because there is an exacting brand standard that we'd like to do, and it depends on their investment capability, depends on what they want. So there are discussions on. I think in time we'd get to the 8, right? That's our target, and that's my commitment to you. So we'll get there. We'll get to the 8, right? Within a combination of uh, flexi lease and managed assets.
Okay, got it. I'll come back in the... Thanks.
Thank you. We'll take the next question from Pawan. Pawan, you can go ahead.
Thanks for the opportunity. So my first question is, what is the timeline for the 47 hotels signed to come into play?
Come again, Pawan?
What is the timeline for the 47 hotels that were signed?
That's very difficult to say. We are expecting a rough estimate is next 1 year, but hotels, how some greenfield may take little more time. Some greenfield project also we have signed. That may take little more time, but it's very difficult to really say that what should be the exact timeline for all these hotels. But we are expecting next 1 to 1.5 years, between that all hotels should come up.
If some of them
Pawan,
don't
but
come up, then there are a lot of hotels in the
yes.
discussion stage, which are conversion hotels. So where we may take over, and so if some of these 47 don't come up, then there will be some hotels which are, which will be conversion hotels which will come up. So I feel that our target of in 1.5 years getting to what another 45 hotels should not be very difficult to achieve.
Okay, got it. Got it. My another question is that can we expect the current trajectory of EBITDA keep getting better for Iconica?
Come again?
Sir, I was asking about its trajectory of EBITDA, which keeps getting better for Iconica.
Definitely it will get better.
This
Okay,
quarter
sir.
we expect the
So,
better results.
Q4 we are expecting better results, because Q3 we had to write off a lot of pre-operating expenses, which can't be capitalized. So those expenses were written off. So that is why you are seeing a minus figure. But Q4 will be in profit.
okay, and regarding that also, with the delayed start, do you think that we can land up anywhere between 420, 450 CR revenue this year?
424.
Around like 420 to 450 CR revenue.
Yeah. We are expecting that only. Around 420, top line we are expecting for this year.
Okay, sir. That's it from my side. Thank you.
Thank you. We'll take a follow-up question from Rahul. Rahul, you can go ahead.
For taking my question again. This is a question for Arjun, and as actually a compliment, just in addition to the previous question that I asked. To reach our targets, to let's say your stated target is to go to 22,000 rooms by FY30. That's a 4-year thing. We need to go, let's say, at a run rate of 3 to 4,000 rooms per annum to kind of reach that target. How are you looking at this? Because we have never done this. It's a very, very steep thing. Even the 3,000 room, sign up that we have right now, we need to kind of keep creating visibility of, let's say, 4,000 or 5,000 rooms to keep running that 3 to 4,000 rooms. How are you looking at this? And do you see there is enough juice in the market to kind of keep doing this year on year?
Well, listen, thanks. I do think that there is enough juice in the market. If you look at the fact that we've got this 5 brand architecture going on, um, each market or most markets can do all 5 hotels brands and multiple hotels. Let's say with Z, you can do multiple hotels in a particular market. So, there are new markets opening up every day. I do think that India still has a really long way to go in terms of tourism development or destination development. So there is an immense amount of scope going forward.
And just a question for Jaiswalji, what is the peak revenue potential quarterly number for Iconica we are looking at, sir? This quarter you said we may touch 23, 24. Are we looking at maybe a 28, 30 peak number, or in your internal assessments?
Yeah, so next year we will peak. Next year definitely we will peak, because any hotel to come to a certain stage, it takes at least 6 months to 1 year time. So next
Sure.
year we will definitely be peaking in the third and fourth quarter, and that will be very good. And I think we will be doing much better than 23, 24 crores. We should be somewhere around 28 crores. We should be able to do.
You should be able to do 28, 30 crores, that kind of range. Sure, sir. Thank you.
Thank you. We'll take the next question from Majid. Majid, you can go ahead.
Am I audible, sir?
Yes.
Yes, you are.
Yes, sir. Sir, my first question is especially regarding the F&B revenue. Like earlier, we were talking to maintain around 40%, and now I think the F&B revenue is around 32 to 33%. So how are we?
No, Mr. Majid, we have never said that we will be maintaining 40%. Historically, it is around 30% only of the total revenue, the F&B revenue will be. because
Oh,
most of our hotels don't have huge banquets. To make 40% revenue, you need a lot of banqueting. Okay, with alone restaurants can't do. So we maintain that figure of around 30-32% only, which we have done in the last quarter.
sir, out of the Iconica 17 crores this quarter, how much did we from the room nights and F&B, sir? Can you give the breakup?
Almost more than 80% is from rooms only.
More than 80% from them. So going forward, as we are targeting 80 to 100 crores FY27, of which how much could be from F&B, sir?
So again, there, see, in this hotel, the maximum rooms are there. There are restaurants are there, but the contribution of restaurant will be lesser than room. So around 20-25% only will come from the F&B, and balance will come from rooms.
Okay, sir. And sir, finally for Q4, how much managed hotels are we adding, sir?
Yeah, Q4, we've got hotels opening in Ambala, Rishikesh, Bhuj, Vadoi. These are the confirmed ones. We have 2 or 3 which may open additionally, but all get pushed into Q1 next year. These are roughly around 220 keys, roughly.
Around 220. Yeah. Of which how much is getting pushed to Q1, or does this include
No,
all?
they are additional. The ones that may get pushed to Q1, I'm not mentioning those. We have at least quite a bit opening in Q1. These are the ones which are confirmed opening right now.
Got it. That's all from my side, sir, and thank you.
Thank you. We'll take a follow-up question from Yash. Yash, you can go ahead.
Yeah, am I audible?
Yes, Yash.
Yes. I think in the Bangalore Central property, you have some renovations going on, right? And the MG Road property.
No, we have planned
No,
renovation there. Right now, it is not. We have not yet started that.
no.
So are we expecting some uptick in the RevPAR there in that particular hotel post the
Yes.
renovations, and how much are we looking to invest?
So that hotel, I'll take that. We're in the middle of evaluating exactly what standard that hotel needs to be at in order to compete with the micro market over there, right? And what is the gap in the micro market? So, we're just in the middle. And of course, if you put in any capital, you do expect a return on that capital. So we're just gonna, we will definitely come back to you guys with exactly the plan that we've got the moment it's firmed up and we have a renovation plan in place. But rest
Right.
assured, money is going in will ensure that they are, there is an uptick.
Yeah, and now coming back to the previous sort of conversation where you guys were basically saying that you guys are going to figure out what you're going to do with the 35 crores or 32 crores that are going to come in from the multi-hotel sale. Just wondering, are we looking at inorganic acquisitions, if any? Yes or no? Secondly, if not, are we looking to do something like another Iconica where we will also have some sort of capital outgo, sizable capital outgo? Not in terms of, obviously, not in terms of expenditure like direct expenditure, but indirect expenditure like the advance that you gave for Iconica, for example. So what are we looking, because I think currently we have a
Yes.
pretty strong balance sheet, so I think a lot of stakeholders and shareholders are kind of looking forward to what you're going to do with this extra capital
Yes,
that's coming through.
yes, it will be a very forward-looking statement. The transaction is in the midway. The transaction is yet to close, and internal discussion has to happen. So it will be very difficult for all of us, any one of us, to straight away answer this. Probably you can ask this question in the next call in May. That time there will be some clarity.
Right. That's completely okay. I'll come back next quarter. But
Yes.
can you give a revenue and a top line and a bottom line guidance for next financial year, if that is not too early? Because I think Iconica is settled. You might understand how
No,
the flow of things are.
but that guideline will decline a bit, not much, because Iconica got delayed by a quarter.
No, guidance for next financial year, sir.
Next 27-28, what the guidance we have given, 500 crores, we should be able to do it.
That is top line and bottom line, cash profit,
Cash,
or
cash
net profit,
profit,
whatever you want to give.
net
PAT.
profit is very difficult to tell now. But once we are in the process of making our budgets and all, once that get frozen by March end, then probably we'll be in a better position to give you that guideline.
But till now, there's no large capital expenditure planned for
No,
next
no,
year,
no,
right?
no, no, no. We are
But
maintaining cash, asset light strategy. We continue to do that.
Right. And from your 500 crore, can you share the amount of money you will get paid by managing hotels and how much of that flows to the bottom line? Because that's a number I've been trying to kind of gauge, but I've not been
See,
able to.
no. See, I'll tell you. See, like current financial, we are looking at a top line from managed business of roughly around 45 crores, out of which almost 47-48% flows down to the bottom line.
Right. And next year, what is that 45 crore
Next year,
going to
the
grow?
growth of almost 20% will be there. Once these 47 hotels comes up, then definitely there will be a substantial growth.
No. So is it going to double the 45
No, no,
crore
no, 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 no. It will not double. See, 47 hotel will not come up in next financial year. It will come toward the end of the financial year. So next year projection roughly around for 58 crores of top line in the managed business and around 48%, 47-48% of the bottom line.
Right. And when you mean bottom line, you mean EBITDA, or you mean PAT?
EBITDA.
EBITDA, right?
Yeah.
Perfect. Okay. I'll just come back in queue.
Thank you. We'll take another follow-up question from Chirag. Chirag, you can go ahead.
Yeah, sorry, I just need some more clarity on this, interest and appreciation. So coming back to the, previous question that I asked about interest and appreciation, which you have mentioned that a total increase is 19.48 crores for the quarter. So that 54 crores, if we take for Iconica, that comes to 13.5 crore increase, per quarter. So what is the balance 6 crore increase that we have
So
seen?
there is some India's effect of other hotels also. No, we have certain other hotels also are there. No, on
No, so
rent.
this is the increase in Q3, right?
Yeah.
Only Q3. So which other hotels have come up in Q3 which would have contributed to the 6
No. There
crore?
is a India's impact of other hotels also. Like we have hotel in Pune. We have a fixed rent. We have that breakup. I'll give it to you, Chirag, offline.
Okay. Okay, I'll take it offline. Okay, thanks.
Thank you. We'll take another follow-up question from Pawan. Pawan, you can go ahead.
Just wanted to ask that as per the board meeting outcome, Mr. Keshav Balji has been appointed as executive director. So is he coming into active role now? What part of the
Yes.
business would Keshav be driving?
Yes, he is right now coming full time, and he's going to be uh, actually right now diagnosing the issues of the company, and then he'll have a clarity by another 1 or 2 months what all he's going to be actively on it. Right now, main role is to get the hotels which are in the pipeline to get them operational ASAP. Also to look at the underperforming hotels, how to make them perform better than what they are doing right now. That is the current role.
Okay, got it. And my next question is, sir, that what next after Iconica Mumbai? So is there any other similar size of property planned on these basis?
Well, we cannot really say because all this also, in fact, Iconica discussion we had about 6 years back, and then they went to a cold store. Then, of course, various factors like COVID and all that came, and the deal came back to us. So I cannot say, predict very clearly whether such type of deals uh, are they readily available. But yeah, we are on the lookout. Now that we have a comfort that Iconica is stabilized, We can take a risk, and somebody asks us the question of what we're going to do with the money that we are getting from multi-hotel transaction. And I want to correct it, it's not 40 crores, it is sub 30 crores after paying taxes. But we are the process of seeing how to quickly deploy that in management, in revenue share properties, upgrading of our existing properties, and of course, if something like a big hotel comes up, then we'll definitely bid for it and try to get that also.
Yeah, we got it, sir. Thank you so much.
Thank you. We'll take the next question from Rahul. Rahul, you can go ahead.
Thank you once again. Just one final question, sir. We already discussed on the depreciation interest element because of 116. So what we see in this quarter is the going to be the run rate for the future quarters as well. And of course, if you keep adding properties on the revenue or the lease side, it'll have some impact. But broadly, this is the run rate.
This should be the run rate. Yes.
So roughly, we are talking about a 24-25 crore kind of interest debt number overall, because your interest cost on your lending on your borrowing will not be a big number. This should all be an impact of ROU only.
Yes. ROU asset. Yes.
Right. Okay. Thank you very much, sir. And also, we've been given feedback on what kind of disclosures we would want to have from the management, and you have been very, very receptive to all the feedback. So thank you for kind of giving us all those disclosures on the PPT, and we hope to have even more. Just like there's a greed for more and more information. Thank you so much for receiving that.
Thanks, Rahul.
A pleasure, Rahul. Thank you for your continued involvement.
Thank you. We'll take a follow-up question from Yash. Yash, you can go ahead. Yash? Okay, since there are no further questions, so would you like to give any closing comments?
Thank you very much for all the questions which you have asked. It'll make us strive for better results, and I can assure you that we're leaving no stones unturned to give you better and better performance in the coming years. So thank you very much. Okay.
Thank you to the management and all the participants for joining this call. This brings us to the end of this conference. Thank you.
Thank you very much. Thanks. Thank you.
Thank you.
Thank you.